Hello, everyone. I'm John Seroka with Seroka Brand Development and the Mortgage Technology and Marketing Committee Chair. And welcome to our webinar today, how Day One Certainty is giving rise to a new superclass of loan officers. Before we start, I'd like to thank our new MTAM committee sponsors at Tavant. Tavant is a digital products and solutions company that provides impactful results to its customers across a wide range of industries such as consumer lending, aftermarket, media and entertainment, and retail in North America, Europe, and Asia Pacific. Their solutions, powered by artificial intelligence and machine learning algorithms, help improve operational efficiency, productivity, speed, and accuracy in the interconnected world to succeed in a rapidly changing business environment. Their suite of products and solutions are routinely rated high by the industry and the media and deployed by leading business names such as Mitsubishi, Caterpillar, Sierra Pacific Mortgage, Electronic Arts, TiVo, Good Mortgage, NewFi, Fairway, Genworth, and CoreLogic. Founded in 2000, headquartered in Santa Clara, the company employs over 2,500 people and is recognized as a recognized top employer. Tavant is an ISO 27001 compliant and SEI CMMI Level 4 compliant organization. The company believes that when passionate people come together in an endeavor to achieve excellence, they can build innovative products and solutions that create a deep impact on their customers' core business. And now, for our topic today, ladies and gentlemen, how Day One Certainty is giving rise to a new superclass of loan officers across the country. We have a terrific panel today here to share how to save your borrowers time and money with the option for a more modern experience, how you can increase your pull-through rates, building a reputation as a low-cost producer, and you don't want to miss that, and finally, preparing for the future version of the Day One Certainty program. So, with us today, I am thrilled to present to you first Vaziri, account executive at Blend. And you know what? I'd like to do a quick shout out to him because he put a lot of effort into organizing this today. So shout out to Van. Thank you very much. Van, sales efforts at Blend mostly revolve around helping lenders throughout the country architect a digital lending strategy that's right for their business. He's spent the last half decade consulting executives at mortgage companies, banks, and credit unions on how to adopt and leverage various technologies. Before that, he worked for a Southern California-based lender in capital markets. And then we have Natalie Hunt, Director of Digital Alliances and Technology Integration at Fannie Mae. Natalie Hunt is Director of Digital Alliances and Technology Integration at Fannie Mae. Natalie is responsible for managing and collaborating with strategic partners and technology solution providers to optimize and help drive digital transformation within the mortgage industry. Natalie is responsible for managing the DU validation service platform and the third-party data vendors to independently order an income, assets, and/or employment verification report, providing lenders with Day One certainty on validated loan components. Prior to joining Fannie Mae, Natalie led engagements that supported business and technology-driven change in the management consulting industry. She has over 15 years of financial technology, consulting, and mortgage industry experience. Natalie is an experienced product partner management professional with experience in driving large-scale digital transformation projects from inception to implementation. And we have Jeff Braddock, Digital Alliances Manager at Fannie Mae. Jeff manages strategic partnerships at Fannie Mae. His efforts focus on the practical problems of partnerships, including ecosystems, capabilities, co-development, and organizational interlock. Prior to joining Fannie Mae, Jeff held various roles in digital transformation efforts. And then we have Liene Kurcalte. Liene, did I say her name properly?
Close enough. That was good.
Okay. She is a product manager Business Technologies at Primary Residential Mortgage. Liene is product manager at PRMI. Prior to getting into the technology side of mortgage, she worked in the secondary market realm of the industry. PRMI is a national independent mortgage lender operating in 49 states with 230 branches, 900 loan officers, and growing. PRMI is 100% a retail model with a heavy focus on purchase transactions. Alrighty, by way of some background, this webinar is a production of the Mortgage Technology and Marketing Committee. The committee was formed to support the development and dissemination of new technologies and marketing strategies that the mortgage industry needs to embrace. As we go through this, please submit your questions and I will direct them to the right individual as they come up, or you can wait until the Q&A time at the end. With that, over to you, Natalie.
Okay, well, thank you so much. That's quite an introduction, so thank you. So I think we're going to start, if I'm not mistaken, with some polling questions. So the first one, this is always a great, fun opportunity to actually do a little bit more engagement and collaboration with the folks on the webinar. So it's always interesting to see what people know and what they don't and what they're here to learn more about. So the first quick poll question, and I think we're going to share the results of this poll at the end of the session when we go into Q&A. But the first one is, are you aware of day one certainty? So I'm going to give folks a minute or two just to select the response. But select yes, select no. Nobody on the phone is judging here. So we're just curious to see who is aware or knows about day one certainty. All right, so I'm going to give them a minute. And Justin, let me know when we're ready for the next question, if we're seeing enough panelists.
Yeah, I think we've got some good response. We've got 85% of folks have responded already, so people are paying attention.
All right, great. So should we bring up the next question?
All right, we're set.
All right, so I think it's, I don't see the next one coming up on my screen. Oh, here we go. All right, a little bit of a slowness there, but we've got it. So if you are aware of day one certainty, this is our next polling question. I promise this will be the last one, and then we can get into the presentation here. Which offering do you use today? So that if you think about day one certainty, and a component of day one certainty is the DU validation services. And within the DVS, we call it DVS for short. We love acronyms at Fannie Mae. So within the DU validation services, we have asset verification, employment verification, as well as income verification. So within day one certainty, which offering do you use today? So if you guys can all select, and all that can apply, so you may use all three. We'll give you a minute or two to select which of these offerings within the DU validation services, which is part of day one certainty, do you use today? And this sort of helps us engage the level of the verification offerings that everybody on the phone uses.
All right, well, we've got about 65, 70% of folks have responded.
Okay, that's great. So if I'm not mistaken, we're going to share the polling at the end of this, correct?
Correct. So I'm going to close it out now, and then we'll get going with the presentation here.
All right, super. Thank you so much.
No problem. I'm going to make the printer.
All right, can everybody see my screen?
We can, thank you, yes.
Yes.
Excellent. Excellent. So today's agenda, thank you for that introduction, John. We're going to be discussing what is day one certainty for the folks here who aren't really sure exactly what that is. What are some of the historical challenges that lenders and loan officers have seen to adopting day one certainty? And what unique approach to day one certainty has Blend pioneered to maximize borrower and lender adoption? And then most importantly, what does this mean to you as a loan officer? I think there's a lot of loan officers with us here today. We want to focus on the benefits that this has for your borrowers and consequently also yourselves. So with that being said, we're going to dive right into it. Natalie, thank you so much for joining us today. I'm really excited to have you here. For the folks who are unfamiliar with the concept of day one certainty, can you please briefly summarize what this is in a nutshell?
Yeah, so absolutely. So we're in our third year of Day One Certainty, which is a program we launched, Fannie Mae launched back in October of 2016. So doesn't time fly? And we went out with Day One Certainty with the goal of, or the objective really, was to give rep and warrant on certain components of the loan application, which included, so Day One Certainty compromises of a number of components, right? It's the appraisal waiver, it's the appraised value, and then it's DU validation services, which is a big focus of what we're going to talk about today, which is around the asset, the income, and employment. So the goal was always to go directly to the data source, right? So if the closer we can get to the data source, we can remove the need to reduce paperwork, which is a huge value from a lender, customer's point of view, as well as from a borrower experience point of view. When you can give approval to do an asset verification or an income or employment verification and go directly to the data source to pull that data back so that we can use that as part of our underwriting decision process and validate those data components on the loan application. So that's the goal around Day One Certainty. And as I mentioned, we are going into our third year. We've definitely seen, and I think the goal today really is to talk about some of the benefits that we've seen from our customers with their implementation of Day One Certainty, as well as some of the challenges, right? We all have a few lessons learned, challenges. So we're also here to talk a little bit about that as well today.
Great, thank you for that overview. And so Day One Certainty has certainly come a long way since it was first founded in 2016, as you mentioned, Natalie. Just curious if you could speak a little bit to this slide that shows really the massive market penetration that Day One Certainty is seeing.
Yeah, so one of the components is that we do track the loans coming through DU all the way through to delivery. And this is actually representative of the most recent. This is since Q4 of 2018. And as we think about just sort of going into our third year from when we launched Day One Certainty, right, we've got more than 1,000 of our customers signed up for one or more of Day One Certainty components, right? So you do have to sign up to do appraisal verification or income and employment verification. There are some components of Day One Certainty that automatically happen, like appraisal waiver, where if we've got information about the property, we will immediately evaluate that based on that data and we'll return a response in our DU findings. But for those components that you do have to sign up, we've got a lot of customers, over 1,000 customers that have signed up. Based on just the overall volume, right, within DU, 68% of our DU loan applications that are underwritten in DU have Day One Certainty components. So it's either we're getting some sort of verification on the assets, employment, income, appraisal waiver, or appraised value. So which is great, right? We're really starting to see our customers sort of using components of Day One Certainty and trying to leverage those components within their loan application. So as I mentioned, right, we're not just looking at what the volume is coming through into DU, but we look at the entire life cycle from origination to closing. Oh, if you could just go back one more slide. Thank you. So we've got about 301 billion loans, deliveries that have been sold to Fannie Mae in the course of the program that contain one or two components of day one certainty. So again, it's going back into, did the loan application at origination get asset verification? And what are we seeing at the point of delivery? So, which is really good news, right? We're seeing definitely steady progress of utilization and adoption in the marketplace. So now
That's really awesome information. Thank you, Natalie. And I think this is incredible because a lot of folks, maybe they've given one of those three elements of day one certainty a whirl, or maybe they're actively engaging. But what is the upside of taking advantage of some of these data validation services that Fannie Mae offers? We're seeing a big improvement on our end, and I know Liene is excited to speak about some of that today. But what are you hearing from your customers?
Yeah, absolutely. Great question. So when you think about it, when I originally stated, when we launched day one certainty, it was really around the rep and warrants, right? That was the North Star or the goal of the program. And as we started working closely with our customers around leveraging these components or leveraging asset verification early in the application process, right? Our customers working closely with us started reporting, we're seeing some really big improvements from when you look at the timeline from application to close, right? That's a critical component, and there's a number of days that on average it can take 50 to 60 days from application to close, and leveraging asset verification, right? We are seeing anywhere from 6 to 10 days in the number of days from application to close when asset verification is used. And the same with employment and income, right? With employment, we're seeing 6 to 12 days of savings time in the origination process. And then with income, we're seeing 8 days. So those are really incredible benefits, right? When you think about it's sort of driving efficiency in the origination process, it's helping to drive down costs, it's reducing paperwork, it's trying to move more digital and more streamlined, and it's really trying to get quicker loans to approval, so really streamlining the overall process. So these are some of just the number of days our customers have shared with us based on some of the benefits that they are seeing with this program.
That's incredible. Thank you for that. And so I know we're here talking about this. We're making it seem really easy, but there are some hurdles to adopting these verifications. I'm going to kick it over to Jeff. Jeff, if you could maybe speak to some of these or bring in some of our panelists to talk.
For sure. And I'm going to caveat this by saying we're going to focus on what likely we would consider to be the least utilized and most difficult validation to receive, which is the asset validation. And so because we have such a great panel here today, I think I'll just start by saying, or asking the question rather, Natalie, when it comes to borrower security concerns, like what are we, Fannie Mae, seeing, and can you characterize what some of those concerns are?
Sure. Yeah. So that's a number one concern we hear from our customers around just the security, right? About protecting the borror's credentials and the security around the borrower having to log in and give approval to say, yes, I'm going to give you my credentials to my bank account for Wells, right? So that you can go and create the API to get the data. So I definitely think there's has been concerns around the process and that borrower experience, but it is secure, right? And for the lenders that we do use this, some of our lenders have even said, look, if you think about just security, this is incredibly secure, right? We don't keep credentials on our system. We don't reside those anywhere. And if you think about today, the alternative method is getting your bank statements in a PDF And potentially as a borrower, you're emailing those statements through maybe your Yahoo or Gmail account, which is also less secure. When you think about that, those documents going through not such a secure way of getting that information to you. So one of the things that we do say is, those credentials, they never get passed to us. They never get saved. If they do, they get deleted straight away. And it's a point of time, right? It's the borrower saying, yes, I would like to access or give approval to do asset verification. They select their institutions that they bank with. So let's say I'm a borrower and I bank with Wells and maybe U.S. Navy. I'm giving my credentials that authorizes the partner to go out and get those banking information directly from that, and then those credentials get deleted. Anybody want to add anything? I'll open up the floor if anybody else would like just to kind of build upon the security concerns. Nope?
I think I think that's great, Natalie. I mean, I think it's a way of saying, right, if you go through the online method, it's a lot more secure than just printing and sending your bank statements. Thanks for that. So I want to turn it to Liene, and from the loan officer's perspective, what are some of the challenges that you're seeing when it comes to DU validation service asset verifications?
So with loan officers, it's ultimately an issue of trust with their clients. Similar to what Natalie mentioned with borrowers' concerns, they are often hesitant to interact with a new site that they have never dealt with on something so sensitive as providing credentials to their bank accounts. I mean, consumers are simply concerned about their security, which is a big deal in this day and age, right? Consequently, the loan officers are extremely wary of putting something in front of their borrowers that's likely to make them uncomfortable. So often they just try to avoid that situation altogether.
Perfect. So, I'm looking at it and I'm thinking, great, borrowers, they don't know what they don't know. They need trust. Thanks for that perspective. So I just want to jump into the cost. Natalie, how much does Fannie Mae cost for the DU validation service?
Yeah, so there is no cost to leverage the DU validation service. There's no cost to submit a DU loan application, and there's no cost to be able to send the reference number and for us to be able to pull and retrieve the data for the underwriting. So no cost for DU.
Perfect. So I guess what you're saying is that DVS charges are negotiated between lenders and vendors. Is that on point?
Yeah, absolutely right. So depending on which partner you use, you can negotiate, obviously, that's a contractual agreement between you and your partner of choice on which partner you use on these services. And that's a fee that may be incurred between our customer and their vendor of choice. That's correct.
Great. And so Ben, since Blend is a DU validation service report supplier, I just want to push it over to you and ask you, how much does Blend charge for assets?
Blend does not charge anything for the asset connectivity piece. Asset connectivity is embedded into the Blend experience and rolled up into the cost. So regardless of the number of borrowers you have or connectivity points associated with individual account connections, the cost would remain the same to the lender.
Perfect. Well, Van, I think it's time for you to jump into how verification is transforming the industry. Thanks a lot.
Thank you. Yeah, we talked a lot about the hurdles here. What I want to focus on is how Blend is actually helping our customers overcome those 3 hurdles and how we're actually turbocharging the loan process, but also the borrower experience. Before we dive into that, I think it's probably worth mentioning what Blend is in the first place for the folks that are not for the folks in the room that maybe haven't heard of us before. We're behind the scenes So we're a white label solution. So there's a lot of lenders out there that might be using the technology today, but you may not be aware that it's Blend behind the scenes powering that experience. But ultimately, Blend is a digital mortgage software solution. We sit between the borrower and your LOS, kind of that engagement layer. And we're really a platform that's designed to bring together some of the disparate technologies that you might have. But by and large, our strong suit is providing really a mobile, omni-channel, contemporary experience for your borrowers. And embedded in that experience includes that asset verification, which we're actually going to show today. So I think everybody in this room is probably aware of the fact that consumer expectations are changing. They're rapidly evolving since the promise of a totally online mortgage was made to the general public by Rocket Mortgage in that Super Bowl ad. Now the technology is actually catching up with that promise. And what we're seeing is across the board, borrowers are craving an experience that's going to keep them in line with their expectations. And so what I wanted to maybe share today a little bit about is how you can help your borrowers meet those expectations. You know, a wise gentleman I once worked with said to me, happy wife, happy life. I'm not married, but I think that might resonate with some people. I think the analogy maybe is not exactly one-to-one, and it doesn't quite have quite the ring to it, but happy borrower, happy loan officer is probably a good rule of thumb as well. So we want to talk about how you can keep your borrowers happy and also in your business happy. One thing I think that's important to call out is how the role of the loan officer is actually evolving today. All these verification points that we're talking about today, we're really focused on assets, but there's a variety of them out there. These verifications, if you're embedding them into your experience correctly, they're materially driving down the cost and the time to fund the loan. What we're seeing is that right now, loan officers, executives at a lot of mortgage companies across the country, they're getting squeezed. In Q4 of 2018, we saw net loss of $200 per loan originated on average across the country. That's startling and overwhelming. In that kind of environment, you know, that's going to naturally change. The market's going to it's going to get better. But in that kind of environment, you need to be asking yourself, not only are you contributing to the top line revenue of the organization, but are you protecting the bottom line of your organization? We're going to see that loan officers that are embracing technology to capture some of these verification points up front, they are becoming a super class of loan officer that becomes materially more valuable to whatever organization they're willing to take their business. And so what we're seeing is exactly that. Every single executive that I speak to is focused on not only bringing in loan officers through the door that can generate volume, but loan officers that are savvy enough with technology to do so in a cost-effective way. So we're talked a lot about this experience today. Let's just show you what it looks like. What is this experience when embedded correctly into the application under your logo look like and feel like? What we're looking at today, the logo might be a little bit cut off at the top, but it says emblem. That's kind of just a dummy logo that we use. But this screen would be branded to the company with their logos and colors and look and feel. But what the borrower can do in this experience is in the middle of the application, this is a 1003 that we've broken down actually into chunk-sized bits. In the application, your borrower has the opportunity to connect directly to their bank and pull in their bank data. And what you're going to see here is we have some little tooltips that inform the borrower how their data is protected. But in combination of having this experience branded under your logo, embedded in the middle of the application, and also the combination of some of these tooltips with a loan officer who can speak intelligently to what this does, we're seeing a massive amount of engagement from borrowers across the board. And just like that, you're done. That's how quick it was. So what's actually going on behind the scenes here? How does Blend pull in bank statements? Well, the answer is simple, we don't. We're actually pulling in the data, and we're going to generate a bank asset statement on your behalf and your borrower's behalf. The benefit to the processor or the LOA, whoever it is chasing down those documents, is that now they don't need to stare and compare that document with 20 or 30 different potential banks that your borrowers are banking with. This document is also machine readable, so we can automatically flag things like letters of large deposit. But what you're seeing here is also that reference ID number being captured that's going to push over to the LOS, allowing you to tap into day one certainty seamlessly without your loan officer really needing to do anything on their part, maybe other than speaking to what this is doing ahead of the process. So let's speak a little bit about the market. What is the market seeing today? There's about $1 billion a day in loan applications being processed through just Blend. There's a lot of other technology providers out there. So there's that number is actually much higher in terms of digital mortgage adoption. But what we're seeing across the board is about 31% of borrowers are applying through a mobile device, and about 56% of borrowers are coming in outside of business hours. What does that mean to you as a loan officer? That means that whatever experience you put in front of your borrower needs to be not only friendly enough to be done over a mobile device, but it should be intuitive and seamless so that they can guide themselves through at least part of that process, because a lot of borrowers are coming in outside of business hours. And I think there's kind of this conception in the marketplace that this is a tool for millennials. Actually, the data that we're capturing tells quite a different story. In 2018, we captured over 1 million applications, and the data is showing that the connectivity rates with some of your older borrowers actually tends to be higher. There's a lot of different reasons why that might be the case, but we're seeing this technology really being adopted across the board. Seems techy and cool. What does this mean to you and your business? Okay, we talked about the material time that it's going to shave off the loan process. We talked about the impact that it's going to have on the organization and just giving your borrowers a nice modern experience. Let's talk about something a little bit more immediate and impactful. Based on the 1 million loans submitted through Blend, we saw that took advantage of our asset connectivity, which hovers around 70% now. Those numbers on the previous screen were a little bit stale. We're seeing a 10% increase in pull-through just when the borrower is willing to engage in that asset connectivity piece. For one of the largest lenders in the country, who's also Blend's customer today, in Q1 of 2019, for all the loans that they pushed through the system, there was a 35% spike in pull-through for loans that leverage the asset connectivity piece. Why is that? We're still trying to figure out exactly the psychology behind that, but there's definitely a correlation. So I spoke a bit, but I really wanted to bring in somebody who's doing this on the day-to-day. Liene, who is a product manager at PRMI, a rapidly growing independent mortgage company, to give us a little bit of the inside scoop on what this means in the field. Liene, are you with us?
Yeah, I'm right here.
Awesome. I just got a few questions here for you. What were you using for asset verification? How are you verifying assets before you were leveraging Blend?
So PRMI is, generally speaking, very technologically focused. We always try to be at the forefront of all these new things coming out that make us more efficient, especially in the industry that's dealing with margin compression and all the things you just talked about. So when Day One Certainty rolled out a few years ago, we saw the potential and jumped in headfirst with some of the other Day One Certainty vendors. Of course, with that approach, we saw some issues with it, some of the hurdles that we kind of previously talked about at the beginning of the presentation. With assets specifically, we saw low utilization and adoption from both borrowers and loan officers due to the process being kind of out of place in the whole loan origination workflow. So we saw exactly those trust issues of borrowers not wanting to connect to their asset statements and doubting that new website that now asks for their credentials that they had never seen before.
Totally. And so how do PRMI loan officers actually speak about the asset verification piece to potentially maybe guide the borrower and increase those rates of connectivity?
So because we are largely a retail model, our loan officers build their business by creating and fostering relationships with their borrowers. And I think that's kind of what a lot of loan officers with independent mortgage lenders do. And the loan officer will often have a conversation with the borrower before they fill out the full application, and they'll talk to them about things like security, especially in regard to connecting their asset accounts. They'll also bring up the fact that if the borrower elects to connect, we will not have to require additional docs on those assets. We will not store those credentials and things like that. And that the LO will ultimately be able to help them better with their mortgage needs if they have more accurate information up front. So connecting to that asset statement gives our loan officers more information. So they try to communicate that to the borrower saying, hey, you know, when you get that pre-qualification, we're going to be able to tell better how much you actually qualify for. So you don't have to run into a situation where you see a house you love and then all of a sudden you can't actually get it.
That's amazing. I think we've talked a lot about the operational efficiencies, but one thing that might be lost sometimes is really that could be a sales tool, right? You're qualifying your borrower early up front and preventing a situation of having to backtrack on what was a pre-qual or pre-approval. So I appreciate you calling that out. And one other thing that you mentioned that's interesting to me is that, you know, it's about giving that borrower that opportunity. It's not about forcing them to do it one way or the other. It's really just flexibility and giving them that option if they want to do it and letting them know what the benefits of it are going to be in terms of speeding up the process.
Yeah, absolutely.
So what has been the difference in terms of maybe how you're doing it today versus how you were doing it before?
So with the blend application, as you mentioned, asset verification is part of the application process, right? So it's no longer out of place, really, as kind of a random request. So with that being the case, we have seen utilization of day one certainty for assets go up dramatically. Borrowers are much more willing to connect their accounts since they trust the system more because that's what they're using for their application. And our loan officers are really more comfortable talking to their borrowers about it. As a consequence, we are seeing better turn times. And the other thing that I really want to bring up that, again, we don't talk about much, but what we are seeing is the ability to provide value to our real estate partners. And thus, loan officers are able to grow their business through that channel. This is simply because better asset pull-through and other benefits that Blend provides, we can really do a verified pre-qualification from a loan officer standpoint very, very quickly. So this allows the realtor to be confident that they won't be wasting their time with a client who cannot qualify for a mortgage. So it's really also a sales tool for our loan officers to explain to their real estate partners how this can help their business and how this can help them save time as well.
Yeah, that's incredible. I appreciate you bringing that up. We don't even talk about that often, but maybe we should. Really, the value that accurate pre-qual brings to the relationship that a loan officer has with a real estate agent, which is a materially important one to any retail loan officer's business. So, Liene, if it's cool, I'm going to share a few comments from your borrowers. Blend doesn't know who these folks are because all the data is anonymized, but we do capture the comments and share them back with the loan officers and loan teams. Here's what a few borrowers are saying about the PRMI experience as it pertains to the asset verification. The steps were clear and easy to follow is the first one. I thought the one that's actually pretty funny is the last one. Very fast and easy. I would say the website could access my bank account info. Was a little creepy, but it was convenient. That probably characterizes the state of the industry today, right? It's creepy, but it's a little bit reluctant, but it's like, you know that it's going to be easy. You probably trust that it's safe and you're willing to do it when given the opportunity and presented with the right information about it. So yeah, I really appreciate Liene, you coming on and giving us kind of that real insider scoop on how you're doing this today. And thank you to our Fannie Mae folks on the line as well. With that said, I will kick it back to you, John and Dustin.
All right. Well, hey, Van, thank you very much. Thank you all very much. Great information that you all shared today. So at this point, I'd really like to turn over to our audience for questions. I have several questions that have come in already. So I will kick that off with some of these over here. Back when you were talking about asset verification, somebody said, how about FinLocker? Van, maybe you can speak to that.
Yeah, I don't know the nuances of the way that technology works. I think there's a lot of vendors out there that provide a verification, different verifications, and FinLocker might be one of those. I know the thing that's different about Blend is that we are the only digital mortgage solution on the market that's certified for Fannie Mae's Day One certainty in our own right. So we're not leveraging any other technologies behind the scenes. We are actually, it is our technology, we own it, and we're certified with Fannie ourselves. And that's why we're able to offer that, the connectivity at no additional cost to our customers, regardless of the number of connections and regardless of the number of borrowers.
Great, thank you very much for that, Van. So hey, bounce back to that that poll slide. Wow, okay, great. Natalie, do you want to speak to these results at all?
Yeah, I mean, it's great that 90%, I think I saw the first slide, 90% of our audience is aware of Day One certainty, so that's good. We're doing something right here. We're getting the message out. Love to see that asset verification percentage grow a little bit more, right, at 60%. But I definitely think with partnerships like Blend, right, we're really hoping that customers will be able to leverage asset verification and get comfortable training their loan officers, rolling this out into their organization, getting comfortable talking to their borrowers about how does this work, you know, reassuring them that the safety concerns or the security concerns. So I definitely think it adds a lot of value, and you know, having Lori and Van here on the phone today, kind of just sharing a little bit more around the asset verification and how it works within Blend, and also really hearing about it from a customer's experience is really good, right? When it's a focus and it's implemented and it's rolled out, this really does work, and it's just getting loan officers comfortable talking to borrowers about this new process. Employment verification doesn't surprise me, 82% right with the work number, which then would follow pursuit on the income verification, but this is all good news. This is great, right? This is what we want to see, and we really hope that this will bring a lot of value in, you know, just in the number of days from application to close, how to drive efficiency, how to drive down cost, right? So we're hoping that more and more of our customers will see the benefits of this.
Great. All right. Well, next question we have over here is, if assets need to be re-verified, are the borrower's bank credentials retained by the third party, or does the borrower need to provide that information again?
Yeah, I could take that.
Yeah, after you, Van.
Yep, I was saying asset refresh. That's what we call it here. We're definitely not storing the credentials. We can't do that and be compliant. We can. That's not something that we have right now, but we're rolling it out very shortly. So stay tuned on and get back in touch with us if there's any specific questions you have on exactly how that's being handled. I'd be happy to field those personally.
All right, great. Another question here from Mike. Mike says, can we continue to partner with our existing vendors if we utilize Blend, or must we order those services through Blend?
That's a good question. There's some services that you might be leveraging today, which you wouldn't need to leverage anymore if you're going through Blend because it's included with Blend, namely the asset verification. We also have DocuSign embedded into the experience and some other connectivity points, for example, allowing borrowers to directly connect to pay stub providers, tax providers. But some of the verification points, for example, for income and employment, you know, a popular one being like the work number, for example. If you have a relationship already with the work number for those other for the verification of income and employment, you could still use those. And the benefit of doing it through a platform like Blend would be that it's seamlessly integrated. So if there isn't a hit, which, you know, a lot of times there aren't, unfortunately, for that technology, and it's no fault of the work numbers. It's just, you know, a lot of folks don't fall into that bucket. The Blend will automatically and intelligently surface the right income and employment documents so that you don't need to manually do that part.
Great, thanks, Van. Another great question here from Terry. Terry says, what details can an LO provide to convince an applicant to provide access to their accounts?
Well, maybe, I don't know, Liene, maybe you want to talk to how you do it, but what I've heard from is really it's about informing them of how the data is protected and giving them the option. What do you have any thoughts here?
Yeah, it's really about that communication, right? Which we often undervalue anywhere. So it's about explaining to the borrower that, you know, we don't store any credentials. It's just a token on the back end that really has very locked down access. If you want us to no longer have access, you can always change your credentials, and just having that conversation around how, you know, how it's really done, how we protect them, and really giving them the option, kind of very similar to what Juan said. A lot of times, if given the option and explained how it's going to work and what it's really going to do, the borrowers want that ease of use and activity, so they don't have to provide the PDFs, which are also insecure a lot of times. If you don't give them the option, of course, the answer is already no. So it's just about providing the option. At least that's what we've seen.
Yeah, and if you have any questions about talk tracks, specific talk tracks that we've seen work incredibly well in the market, there is an element of psychology here, but it's mostly just informational. I'm happy to share that with whoever that question was coming from, because part of a standard blend rollout and training is helping equip your loan officers with the right information, and that information definitely includes the right talk tracks for things like asset verification.
Okay, well, Brian here asks, how many vendors are approved to offer all D1C products?
Yeah, this is Natalie with Fannie Mae. I can take that one. We currently have a combination of asset providers, obviously Blend being a direct integrated provider on the asset verification. We've got a few others. Then we also have the work number, which is Equifax. We have a handful of manual VOE providers, which is the manual verification of income and employment vendors. And then we have a number of tax transcript vendors, and all of those are on Fannie Mae's website on our Day 170 page. So right now we predominantly have a lot more tax transcript vendors on our platform, but in total we have about 25 vendors in our ecosystem that are listed on fanniemae.com on our Day 170 page.
Okay, here's another question from Nick. And Nick is asking, Nick says here, cost seems to be an ongoing issue. How much is the SaaS fee for smaller lenders? Does it cut into their margin?
Yeah, Blend today is working with about 150 different lenders. In terms of the distribution of customers, I think we definitely lean more heavily towards distributed retail lenders, independent mortgage banks. And what we're happy to share with you is exactly what some of those costs, where you recoup those costs, both immediately in the short term and then also in the long term. But there's a little bit flexibility there usually, but every lender that we've spoken with has made the decision on Blend, not for some hope in the future of maybe reaping the benefits, but because there was immediate and drastic ROI to be experienced.
Okay. Next question is, what LOS system does Liene use? Did she have integration challenges when implemented?
So we use Encompass, which often is fairly difficult to integrate with. And we've seen a lot of challenges in the past in general with how long integrations take, and Blend actually was surprisingly quick. I think back 2 years ago when we did the integration, it took us 2 weeks, which for reference, is an extremely short period of time. We integrated another point of sale vendor at the same time, and that took us about 6 months. So comparatively, this was super easy. Now, that integration was fairly simplistic, so it requires a couple clicks on the LOS side to actually get the loan in. But Blend has a lot of APIs, and what's available today is a lot of automation. And for us as an enterprise, we're actually building our own automation on that to make it super slick and seamless in terms of the integration. So it's really been great partnering with Blend on that whole process.
All right. Do you have to be a Fannie Mae direct seller in order to utilize D1C?
I'm in the interest of
I
conflict.
can take that.
Oh, okay. Go ahead.
Yeah, it's Natalie from Fannie Mae. So this is how it works. You as a Fannie Mae approved seller servicer, right? You have access to DU. If you're a non-seller servicer, you can still use the asset verification and other day one certainty components, but you do have to ensure that your corresponding lender that you may sell your loan to supports that particular partner of choice that you've used in leveraging that day one certainty product. So it's always worth just, doing your due diligence to make sure that you've checked with your investor that you might be repackaging and reselling the loan to, that your partner of choice or the vendor that you use to do asset verification, or maybe obviously the work number is the only one, but if you're doing manual VOI, VOE, just to ensure that they don't have any restrictions or constraints on that.
And from the Blend perspective, that generated asset statement that I showed you earlier, Natalie might slap me on the wrist next time she sees me for saying this, but that is approved with Freddie and Ginnie as well. So Fannie was the first one to approve that asset statement. We have a really great partnership with them. But I think the industry is by and large understanding the benefits associated with some of these verifications, and as a result, they do accept that Blend generated asset statement. And then also, I think even in the non-QM space, which seems to be growing slowly but surely, we are seeing folks really take important the idea of verification. And the more verification you can do up front, the better, because for those loans that are not GSE loans, you have even a larger risk associated with them. So even more important that you're getting the right data verified.
Yeah, I would definitely agree with that, Van, right? We've always positioned it from a benefit as selling loans to Fannie Mae, but there's a lot of upfront benefits in just cost savings and time savings that, even for non-conform, for jumbo loans, you can definitely use an asset verification, right? There's nothing stopping you to automate the verification process. Or even now I've heard that FHA is accepting asset verification. So, I think this is going to continue. The drive to move towards digital transformation and sort of reducing the need of paper documents is definitely going to continue to sort of move forward, right? That can be leveraged throughout your entire portfolio.
Cool.
All right.
Well,
how does D1C deal with a self-employed borrower?
Natalie, do you want to take that one?
Yes, I can take that one. Sure. So that's a good question. We, with the self-employed borrower, we do calculations within DU based on what information is provided on the loan application. We've also, I'm sure some folks on the phone, or maybe where this question is coming from, we did announce in December an initiative with LoanBeam where we are leveraging LoanBeam's self-employment borrower calculator. So what we've done is we've worked closely with LoanBeam to embed Fannie Mae guidelines and calculations within their worksheet, so that if you're a lender and you happen to be using LoanBeam, and as long as you don't modify any of those calculations with its self-employed borrower, and you provide us the income on the loan application, you will immediately get rep and warrant on that particular element. And then when it comes time to delivery, you would keep a copy of that worksheet and deliver us a special feature code so that we can honor the rep and warrant on the self-employed borrower income calculator. Pretty straightforward process. And that's something, we introduced in December. So it's a fairly new offering. It's really been in production for the last 4 months. And it's something we're going to continue to evaluate and look at long term in sort of the direction we want to continue to evolve in self-employment borrower income calculator. Does that help?
I think that would cover it. Yeah, that sounds like it would definitely cover it. I think you actually answered 2 questions at the very same time over here. So,
oh, great.
Yeah. So, it doesn't look like any more questions are coming in. Alrighty. Well, looks like that pretty much ties it up. So, thank you everybody for joining us today. And by the way, we want to make sure that we do our best to deliver quality content. So I have a favor to ask of all of you. You'll all be receiving a survey probably within about the next hour. So if you could please take the time to fill that out and let us know what you thought of today's webinar, that would be much appreciated. Also, if you have anything that you would like to learn about in future webinars, please let us know that as well. All right, thank you again, and everybody have a great day.
Thanks, everybody.
Thanks,
Thank you.
everyone.
Bye.